if presented with a choice between receiving dividends every month or a quarterly basis, I suppose many of us can argue that most would likely prefer receiving payouts every month. I believe it has more of a psychological impact than it does a physical one in terms of reinvesting dividends and starting a snowball effect. If you're trying to build up a sizable holding in several of your top dividend companies, or if you're looking to live off of your dividend distributions, it surely helps you manage your finances more successfully than living off quarterly dividend distributions. It definitely helps in terms of maintaining motivation. That is why in this video, we will tackle this company with a 9% dividend stock that is now paying monthly dividends. And it would be amazing if you subscribed and hit the notification bell if you learned something helpful from this video. Besides, it's free and you can unsubscribe at any moment. But otherwise, you'll always be the first to know about new money-making tips as we share them. It's a win-win, so how about we get going? We'll talk about a high-yielding dividend stock that just made an extremely uncommon decision. They changed from paying shareholders quarterly to paying investors every month. Additionally, as a result of this, the company also increased its dividend by a minimal amount. What's also fantastic is that this business currently returns over 9%. Also, based on their balance sheet, the stock is currently undervalued at its current trading price. The location we're examining today is SLR Investment Corporation, or SLRC. SLR is a business development firm that focuses on strategic income-oriented control equity investments in middle market companies as well as secured debts, subordinate debts, growth capital, and other types of debts. The company makes investments across a diverse variety of industries, including asset management, automotive, aerospace and defense, air freight, and cargo transport. SLR typically puts between $5 million and $100 million into any deal that it agrees to. Additionally, SLR typically only commits for 3 years when they make an investment. Presently, 17 trades. According to Yahoo Finance, SLR has a dividend yield of 9.18% at 87 cents per share. They have announced their first monthly dividend, which will be paid to shareholders on May 3rd and will be $13.67 per share. The corporation did once cut its dividends, but that was way back in 2013, 9 years ago. There haven't been any further reductions in their dividends since, which is a positive thing. SLR last increased their dividend in 2018, and even then, it was just by 1 penny. If you're looking for high income in your portfolio to either live off of or accumulate a dividend snowball, the stock still manages to provide an unusually high monthly dividend, despite not offering much in the way of dividend increase. A recent merger is one of the reasons that SLR investment firm is now paying monthly dividends. SLR Senior Investment Corporation, a completely different BDC that was traded publicly under the ticker name SUNS, was recently amalgamated with SLR Investment Corporation. Last December, shareholders approved the deal and we are already witnessing its outcomes. Its 125 various businesses, the new SLR Investment Corporation has investments totaling more than $2 billion in assets, according to a press statement. According to SLR, they anticipate that the two businesses' merger will give them better access to less expensive sources of loan capital. Additionally, they anticipate that the combination will increase trading liquidity and make the merged company's stock more appealing to institutional investors, which may result in larger equity research coverage. Additionally, uniting the firms will further diversify their holdings as there will be one sizable corporation with a wide variety of holdings rather than two distinct entities with a small number of enterprises in their portfolio. Before we continue, we would love to see your suggestions in the comment section about particular topics you want us to talk about in the future. Done? Let's get going! SLR Investment Corporation differs significantly from the traditional business development firm in several ways. The majority of BDCs, such as Ares Capital and Owl Rock Capital, offer to fund businesses that are either wanting to grow their operations or who are looking to restructure themselves and essentially require financial support to remain in business. However, even when SLR does make these kinds of investments, its asset financing sector accounts for a sizable portion of their revenue. So SLR will occasionally just provide funding for a particular corporate asset, as opposed to merely providing general capital to these companies. For instance, SLR may offer a business the finance it requires to buy one particular, or perhaps a few particular, significant and expensive assets that SLR feels will enable the company to grow its operations. Therefore, this might be anything from a construction firm in need of cash to purchase new heavy equipment, to a shipping company seeking finance for a new marine vessel, or even a forestry company trying to buy a new Cessna that would aid them. SLR therefore prefers to concentrate on where all of their investment is going for a company, rather than simply writing a company a $10 million check and allowing them to decide what to do with it. As of September 2021, SLRC's investment portfolio consisted entirely of secured investments, with senior secured investments making up 92.1% of the total. This, in my opinion, is significantly greater than the average BDC, while SUNS, on the other hand, has an investment portfolio that is entirely comprised of senior debt and senior secured debt, which is, in my opinion, quite impressive. Once the companies are joined, each company receives about 29% of the investments from both. This indicates that, before the merger, both SLR Senior Investment Corporation and SLR Investment Corporation provided capital to 29% of these companies. Given the amount of overlap already there, I can see why a merger would seem so alluring. When their investment portfolio is broken down, we can observe that life science firms make up 26.1% of it. SLR invests in later stage pharmacological and medical device research, diagnostic healthcare IT, and healthcare service businesses, according to their website. These investment types are often thought of as higher risk, higher reward types of situations. The portion of their investment portfolio that is made up of more conventional BDC investments, or what they refer to as cash flow, accounts for 26.4% of their total investment portfolio. This thereby depicts the business they invest in, who will use the money for acquisitions, leverage buyouts, capital growth, and other purposes for which businesses would turn to BDC for financing. One thing to bear in mind while analyzing the metrics for this company is that SLR senior secured loans are floating rate loans. This implies that SLR will earn higher interest payments from their borrowers as the Fed raises interest rates. As a result, they will gain from increased interest rates. In addition, the balance sheet shows that the business's book value for the most recent quarter was $19.93 per share. Because SLRC is currently selling at $17.87 per share, the company is currently trading below its book value in part due to the assistance of the merger with SUNS. We can see from the stock price performance over time that since the company's IPO in 2010, its stock prices have decreased by nearly $5, or roughly 2.99%. SLRC is also down roughly 3.72% from the same period last year. Not exactly good news, but this also doesn't take dividends into account. Only the performance of share prices is being examined here. If we were to examine the results of a $10,000 investment made when this business initially began, we would learn that if you had decided to reinvest all of your profits, you would have received an overall return of 202.63%. The overall return on your investment would have been 123.22% if you had retained the money. You would have ended the year with a balance of $2,273.49 if dividends had been reinvested, resulting in an average yearly return of 9.52%. You would receive about $231 a month in dividends from this stock if you own 1,693 shares of SLRC at the current dividend yield of $13.67 per share. If you made a one-time investment of $10,000 and didn't add another dollar to the SLRC, the snowball effect would have brought in a decent sum. To sum up what we've just discussed, I reckon SLR Investment Corporation is a good choice for a BDC. Although it's not in this industry's leading position for me, I still think the stock is relatively average. When compared to rival BDCs like Ares Capital or Pennant Park Floating Rate Capital, the share price performance isn't exactly stellar. However, these BDCs either don't pay out dividends on a monthly basis, or their dividend yield isn't as high. Since all of the company's loans have floating rates, I think that if interest rates climb, this should be beneficial for the business. They should gain from the extra income from these investments. I believe SLRC is a reasonably good choice. if you're seeking to invest so you can live off of the dividends, and it is at least worth considering for perhaps a minor part of an income portfolio. I'm extremely interested to see how this BDC will fare after the merger has been completed. But as necessary, do your personal research and scrutiny before making an investment. And to lessen the risk you're exposed to, remember to diversify your portfolio across various holdings and industries. Thanks for watching. I hope this video helped teach you something new. And if you enjoyed this video, please subscribe and click the notification bell for more content like this. Until the next one, bye!